Good morning. Welcome to IG's early morning call. It's Wednesday, 27th of September. Let's take a look at the headlines as we begin with gold at a 1 month low. It's driven lower by that stronger dollar, which keeps its primacy in the markets. And we've got a drop below the 1900 level. Is it significant? Well, certainly we've got a new view on where the gold market is going and a new expected price target now down at 1860. Micron earnings after the bell this evening. Wall Street expects another loss in the quarter, but the artificial intelligence could well give some sort of support to the chip maker as it moves into the space. And there's concerns about the largest storage hub in the States for oil. It's fallen to critical levels at the Cushing supply depots. Oil stockpiles, pushing all this at the trading day today for the second day up for the price of oil. More on all that shortly. Let's take a look at what's happening with volatility. We saw yesterday's spike up to those 1 month highs we were talking about this time yesterday, just hitting the 200-day moving average. If and when we get past the 1960, the next line to watch out for is 21.5, which gives some sort of fresh air to us traders in terms of opportunities. And the opportunities are on the short side. That being said, London markets could well be the outlier with a gain at the start today. Currently trading at 76.17, up on the cash trading day close yesterday. Look at the MACD though. It's certainly looking to me as though this wants to push lower. We are yet to see a drop for the blue line, the MACD line below the signal line. But when we do, these green histograms change to red. And that is an indicator that people are looking for a better price to go short on this market. We are down below the 200-day moving average. I think if this does drop further on down, I think that the keen money will then be short on these markets. But at the moment, we are performing better than we're seeing in some of the other European markets. German DAX has, in fact, in the last half hour or so, let me just quickly change this on to 30-minute candles. Last half hour or so, we've seen a little bit of an uptick, and in fact we are now up above the close yesterday on the cash session, which is this vertical dotted line here on the German DAX. So things are beginning to show some sort of an improvement. I was going to say it's the London markets benefiting from the price of oil, but it certainly seems like now there is a little bit more of an uplift, and in fact the same with the French markets as well. Yesterday we disappeared below this line of support intraday down at 70.52, managed to escape that with a pullback on the session to close just above that line of support. And in today's trade, you can see we have got money going in now into the French markets. But nonetheless, a lot of downside, I think, potentially on this as markets price in reality that interest rates are just not going to come down anytime soon. We got more evidence in the States with that push higher for the 10-year Treasury yield, suggesting that the markets are now beginning to have to live with this new reality of higher rates for longer. More on that in just a minute. Let's take a look at what's been happening overnight in the Asia-Pacific markets. I want to take a look, broadly speaking, at what's been happening there today with losses on the Nikkei and the S&P ASX 200. We do have a rise, you can see there, on the Hang Seng overnight in the markets there. In Australia, a CPI monthly indicator showing a 5.2% rise in line with expectations after 4.9% in the previous month. Now, let's go back and take a look at what's happening on Wall Street. In fact, yesterday's trade, we saw losses across the board in excess of 1%. In fact, the Nasdaq was the worst performer. You can see there down on the trading day in yesterday's session by a margin of 1.5%. Let's take a look at what's happening with that Nasdaq on the grand scale of things. A bit like the French markets intraday, we saw a drop below this line of support established with that drop we saw down on the 18th of August down to 14,550. But there was a little bit of a recovery on from the close. And indeed, we got a little bit of a green candle in the session in today's trade. One of the stocks to watch on this market, if for no other reason, it's a good news story today. It's 25 years since Google started for business, 25th anniversary since it was first registered as a business by Larry Page and Sergey Brin. The company emphasizing in its message to its employees and also to shareholders, the company emphasized that much has changed since 1998, but also said that its mission has remained the same: to organize the world's information and make it universally accessible and useful. Its dominance continues to cause monopoly concerns, of course, amongst many countries, but there is no doubt about its success. People always talk about wanting to Google something on the internet. The fact that the name has become a verb is a testimony to its strength and dominance in this market, for better or for worse. The stock, for the record, yesterday closing down at $129.87. In terms of the very long-term picture, I'll show you the entire trading that we've seen for Google. You can see coming to the market. In fact, this only goes back to 2014. Coming to the market in 1998, or in fact, it was established as a business in 1998, came to the market way after that. And indeed, this rise to a record high here at 15,462, which $154.62 on the 15th of November, 2021. The stock will open all sessions on the IG platform this morning at $129.87. I'm not suggesting that there's going to be any trade around the fact that it's the 25th anniversary, just a nice little acknowledgement of Google's efforts to, as it says, make the internet universally accessible to us all. Now, let's take a look at some of what to expect later on today. We've got German GfK consumer confidence. In fact, it's just come out. Negative 26.5 in October. Now, this is lower than the anticipated number of a negative 26. The German economy is finding it difficult to regroup around this idea that the retooling of its massive auto industry, which has been a global driver and a really big driver for the German economy over the last 25, 30 years, especially as it's managed to continue to benefit from what has been a low interest rate environment from the European Central Bank, which has been steering its low interest rate environment, not to help the German economy. It's just the German economy, because it makes so much stuff, has benefited from the generally low Eurozone interest rates. But there is a problem now. There's no doubt about this. There was a revision down in September down to a negative 25.5. And we know that the economy continues to flirt with a recession, as we see the markets, as I say, trying to regroup around this idea that electric vehicles are going to be the new norm. And it's to some degree successfully retooling BMW, Audi, Volkswagen, all the big automakers, and also the big manufacturers for washing machines, for tools. We have large household names like Bosch. They're all finding they're going a little bit more tough. The competition headwinds coming through from China, and the fact that there's a downturn in the Eurozone and higher interest rates causing some problems for the German economy. 1:30 p.m. today, we get durable goods orders out in the States, and that's something worth watching. Before we take a look at the foreign exchange markets, at 1:30 we get the month-on-month figure expected at a negative 0.5%. This is not necessarily a number where you should necessarily listen to what economists are saying, because it is such a volatile figure. But nonetheless, it is something worth watching at 1:30 today, and we will be covering that in our new show, the Beat the Street show, at 1:30 today. Angeline Ong will be covering that, amongst other things to watch out for when the US markets get underway. Let's take a look at what's happening with the dollar basket, because the dollar has settled for the past few hours just below 106, 105.92, you can see here. And we've got to go all the way back to the 30th of November 2022, when we last at these highs. So a new 10-month high for the greenback. Markets have just made adjustments to the Fed's higher rates for longer narrative. And the one effect this has had on the markets has been pushing down the price of gold. And the significance there today is the fact that, in the last couple of days, it's actually dropped now down below the line of support for this symmetrical triangle here. And as I was saying yesterday, the fact that the dollar is rising, this is just a dollar price. In sterling, it's higher. So if you want to go out and buy gold today, you think it's a good price. If you're paying for it in sterling, you've got a currency risk in all this. And the currency risk is that you're paying more than if you were buying it in dollars. The market's now looking as though they could well complete technically with this deadline here at 1863. That would be the lowest trade we've seen since the 10th of March. That is technically how to trade this. The mouth of where you see this market moving between the top and the bottom, the line of resistance and support, you give your trajectory, which takes us down there to 1863. We're currently trading at 1896. If you are short on this, your stop goes above what was that previous line of support, now the line of resistance. So you'll stop at around about the 1915 level. 1896, 1863 is the move that we've now got on the price target for that. The market now awaits two pieces of data that could shake the dollar and maybe gold. First of all, the final reading of US GDP on Thursday. Expectations are for growth in the quarter to be reduced to an annualized rate of 2.2% compared to the preliminary figure of 2.4%, and the first quarter's expansion of a 2% reading. Core PCE data is due on Friday. The core PCE price index is the less volatile measure of the PCE price index itself, which excludes the more volatile and seasonal food and energy prices. It's forecast to come in at 3.9% in August compared to 4.2% in the month of July. In this context, I want to take a look at what to trade for euro dollar. With that strength in the US dollar, show you this 100% retracement of this move here has been achieved in the last few days or so. In fact, let's get rid of that Fibonacci there just to give you some more clarity. You can see quite clearly now the drop below this line of support we had back on the 31st of May, now trading at those levels not seen since the 16th of March. New price target 105.16 were the support lines we had here back in March this year. And when, and if indeed when it's broken, if you get a candle close below there, there's your new line of support and your price target at 102.27 if you're short on this market. And that would be the new sort of area to look out for. Maybe perhaps possibly that area there at 102.90, which were the highs we saw back on the 11th of August. That might be a better price target to go for if you're short on this and you get a candle close below the 105.16. But whichever way you cut it, this dollar strength is causing all sorts of an upset for the euro. And indeed it is too as well for sterling. You can see same direction of travel. Sterling finding the going tough. And in fact, in today's session, we've seen a new spike lower to new levels not seen since the 17th of March this year. And we're now on a price target here of 120.10, which were the lows we had back on the 15th of March. And the dollar's doing all sorts of damage as well to that Japanese yen. The authorities in Japan are continuing to monitor this market. This is the dollar rising against that weaker Japanese yen, 109.12. When we saw it pass 150, remember that back in October last year, we saw the Japanese markets come in, the authorities come in to support the Japanese yen. Will we get the same thing? Not too far away from that 150 level at 149.12. So continuing to watch that on the foreign exchange markets. Now let's take a look at some of the markets to watch out for in terms of some of the figures coming through for corporates here in the UK. I want to begin first of all with a chart of what's happening with Saga. This is the company that concentrates its business down towards those that are of a certain age. Anybody above 50 gets opportunities to dial into the opportunities that are perceived to be given to those of that age group for travel, for medical insurance, for household insurance, all sorts of things that Saga provides. Yesterday, we saw this stock rise by a margin of 6.29%. There's some good figures out this morning. Saga said it expects annual revenue to rise, these are first half figures this morning, to rise in double digits and underlying profit to beat market estimates. In the first half, Saga's revenue rose 15% to £355.3 million and recording a loss before tax of £77.8 million. Now, that's down from the bigger loss of £261.8 million in the same period last year. Lots going on under the covers. But broadly speaking, I think these are certainly perceived to be good numbers by the management. We'll have to see what things happen in terms of the move in the markets there. If you are short on this, stock goes above the top of yesterday's price, and you'd want to see a break of this line at 112 to take you then down to levels not seen since the back end of last year. I'm not so sure. Be interested to see what happens with Saga at the start of today's session. I want to stay on the charts because there is another chart which is of real interest, I think, for those in the auto sector. Pendragon, one of the larger resale cars. It also has new business, new cars business as well. Look at this. This stock is up 73.74% over the last couple of weeks or so. The company's come out with pre-tax profit up 9.6% on revenues of 15.5% up on this time last year. The company says challenging economic conditions with pressure from higher interest rates and ongoing elevated levels of cost inflation. But this rise that we've seen in the stock, taking us up not too far away now from this new dotted blue line here. Pendragon confirmed yesterday it's received another unsolicited proposal for the business. This is the third one that we've seen since the stock started to rise back in March this year. Initially, we saw a 29 pence price target for the first bid, which then failed. We can see here a spectacular loss in the stock. Then in the last week or so, we've seen two bids come through. The latest yesterday from AutoNation for £447 million in cash. This is the 32 pence price offer, which is this dotted line up here for Pendragon. Let me just expand this chart out to give you a little bit more depth and analysis as to when we last saw levels of that all the way back on the 15th of September 2017. This comes after the top shareholder, Head-In Mobility Group, and the US-based PAG International sweetened their initial joint proposal to buy the company off the market following a rejection of their previous bid at 29 pence. So 32 pence now seems to be the new target. And I think this is an overpowering story over the earnings out today, but it will nonetheless be interesting to see where this stock starts. Today, it closed yesterday at 29.9 pence. Clearly, the company says there are economic headwinds, but nonetheless, we are in a position where I think we're seeing some interesting moves in this market. Now, let's take a look as well at what's happening in some of the other areas of the market, because I wanted to point you towards another stock worth watching today. It's the Swedish company Hennes and Mauritz. The operating profit coming in at 7.74 billion crowns against a year earlier 902 million, boosted by cost cuts. H&M says September sales to be down 10% year on year, measured in local currencies after they were unchanged in the third quarter. Now, this chart is a CFD. It's not on the spread bet chart. I've gone back to the IG platform rather than my PRT, my main chart package, which I normally use, which you can get hold of on the IG platform. This is the IG platform itself on the CFDs. This little 15 here means there's a 15-minute delay. The stock will open at 155 crowns, and the company will open after that third quarter figure, where the company has warned that sales for September will be down 10% measured by local currencies. This is a little bit, I think, of a concern, but it is nonetheless all part of the retail sector, which is having so much of a concern at the moment, with many people now in the thick of this concern about prices, with rising inflation and inflation likely to stay at elevated levels. Now, let's move back and take a look at what's happening with some more of the stocks to watch out for today. I want to begin with Costco, first of all. It came out with earnings last night. Shares fell nearly 2% in extended trade for the business, despite earnings and revenue topping market estimates in its fiscal fourth quarter. Earnings coming in at $4.86, beating forecasts of $4.79. Total revenue up 9.5% to $78.94 billion, driven by demand for its ultra-low priced essential goods. The membership-only retailer also seeing a near 8% rise in total paid household members at the end of Q4, while its income from membership fees jumped 13.7% to $1.51 billion. So now the big question is why did the stock fall? Now, it's not an all-session stock. Yesterday, I was talking about this as a stock to watch. And as I said, it fell 2% in trade late last night. The reason was, I think it's all down to poor demand for big ticket discretionary items where margins are best. The low price, ultra low priced essential goods, which is what Costco is known for, has got the slimmest of margins, and they try and get people through the door. One, through their membership, which is something that's another part of the business which they get money from. But secondary is to try and entice people to buy these discretionary goods where margins are higher. And that has failed because people just don't have the money. So the stock closed down at $553.40. Add an extra 2% on the downside for that when shares get underway a little bit later on. Now, let's take a look at what's happening in the technology sector. Micron Technologies is scheduled to report fourth quarter earnings after the bell this evening on Wall Street. For the past few quarters, the chip maker has gone through difficult times. Demand has drastically dropped after the pandemic-fueled frenzy, and elevated inventories put pressure on margins. Revenue forecast to fall for a fifth quarter in a row by 41% to $3.89 billion. Micron is seen posting a loss for the past 3 months, the fourth quarter in as many quarters, this time of $1.18. Now, if Wall Street sees a return to profitability this year, it's unlikely to happen before the second half of the fiscal year, according to analysts. But has Micron turned a corner? Well, this is the big question that many are looking for. The boss, Sanjay Malhotra, called the bottom of the memory chip market. Analysts covering the group seem to agree. Deutsche Bank upgraded the stock to buy last week as DRAM prices have started to improve, and thinks that the expansion of AI will benefit Micron. Look at what's been happening with the share price chart. It's been quite a grind higher, but nonetheless it is higher than it certainly was at the beginning of the year. Last July, NVIDIA announced it was using Micron's high bandwidth memory chips in its data center products. Even though Micron shares are far from their early 2022 highs, the stock has been rising since the start of the year. Now, this is an all-session stock on the IG platform. It will begin at 9 o'clock this morning UK time, so if you see any trade on from this report, it is all sessions on the IG platform, and you can trade this after the bell this evening when the stock produces those numbers for the latest quarter. Let's take a look at what's happening on the oil markets, which is another interesting area of the trading day today. Oil prices have found support in the latest API data, keeping WTI above 90. Let's take a look at the API figures as they have been reported. A 1.6 million barrel increase in crude inventories. Analysts were expecting a fall of 1.6 million barrels. Gasoline inventories fell this week by 70,000 barrels, while distillate inventories fell by 1.7 million barrels. But I think one of the areas of the market where we're seeing most interest, and if you look at the share price chart or the price chart here for US crude, which is WTI, you can see we're up for a second day in a row. Now, the level of stockpiles at the Cushing storage hub in Oklahoma is key here. Cushing is a strategically located area of the market, and it's put down in this area of Oklahoma to pull in barrels from top US shale fields and Canada. It's hundreds of tanks are tied to pipelines that supply US mid-continent and southern refineries and funnel oil to Gulf Coast ports. Now, these fell another 800,000 barrels to a 14-month low yesterday, just under 23 million barrels. Why is this important? Cushing has a storage capacity of just under 100 million barrels. Storage capacity is at 24%. Now, if storage falls below 20% of capacity, roughly below 20 million barrels, it can cause massive operational issues. It begins to stir up the sludge at the bottom of the tanks, and you cannot get it out. And whatever comes out, you can't use. So you can see we're pretty much scraping the bottom of the barrel, to use a coin of phrase, and this is seeing oil prices higher. Let's take a look at what's happening as well in just one other area of the market. I wanted to update you on what was our top headline this morning, and that is the price of gold. I want to return very briefly to the gold price just to update you on what's been happening there. 1898, just to reiterate this, my price target is now 1863. I'm short on this with this rising line of prior support. So my stop is at 1915. My price target is at 1863. And I bring this up because I wanted also to take a look at what's happening with copper, the base metal benchmark on its way down again today, not quite as low as we were intraday yesterday, but very nearly completing this head and shoulders pattern. But as I said yesterday, technically this has been obliterated by this rise that we saw up to the 200-day moving average back on the 1st of September. But September was a negative month, and looking like we're going to close out the month negatively. My interest here is the breakdown below the 80.38 level, which would then take us down to the lows that we had back on the 24th of May at 78.70. So I think that is all part of this drop in commodities, partly due to that rise in the US dollar, partly because I think that people are going to start to scale back their demand for things like copper as we see economies continue to monitor these high interest rates. That's it. Do watch out at the start of the day's trade for Pendragon and also Saga, also HMB if you're a CFD trader on the IG platform. And we'll be back at 10:30 with Starting the Markets, and again at 1:30 with Beat the Street.